Greetings, everyone. I want to extend a warm welcome to all of you joining this session on mobilizing private investment to boost economies and sustainable livelihoods in the Sahel. My name is Jim Winkler. I'm the Vice President for Economic Growth at Creative Associates International, which is sponsoring this session. And I'm delighted to have this opportunity to spend some time with you to talk about some of the really interesting and innovative issues that are now emerging in West Africa. We are implementing with USAID the West Africa Trade and Investment Hub, which I think is demonstrating some of the latest thinking that Samantha Power and USAID have been really promoting in terms of private sector engagement and localization, how we are working with private companies, private investors, transaction advisory firms to really leverage private capital and private investment that's going to drive economic growth and job creation, export competitiveness, and all of the benefits that economies need to have stable and happy people. And in this session, we're going to have the opportunity to talk to two of our partners in the Trade Hub. We have 80 partners now with about $75 million deployed and over $500 million in private capital that is being leveraged through this program. So I'm going to ask each of our panel members to introduce themselves so you have a chance to quickly hear our panel members, beginning with Heather, and we'll go around the four panelists.
Great, thanks, Jim. Hi, I'm Heather Bateman. I'm a Director of Investments for Africa at the U.S. International Development Finance Corporation, or the DFC. I specifically sit in our Mission Transaction Unit, which partners with USAID and its programs, such as the West Africa Trade and Investment Hub, to support investment in the countries where we work. So, pleasure to be here. Maybe over to Charles, go ahead. Charles, looks like you're muted. There you go.
Thank you. Hi, I'm Charles Spillett. I cover the Ghana portfolio and the financial institutions relationships as well. And so with the Ghana portfolio, we are supporting SMEs across the country, 10 SMEs. And with the financial institutions, we cover both the impact funds, the guarantee funds, as well as specialty financing vehicles such as that offers financing for equipment manufacturers. Thank you.
Over to Paul Wayne.
Hi, my name is Pauline Kerber, and I'm the founder and managing partner of ShEquity. So ShEquity exists to address the US dollars 42 billion gender financing in Africa. And our investment strategy is really around combining cash investment and technical support and access to high value networks. So we aim for financial return combined with positive impact on the people and the planet. Thank you. Hand it back to you, Han.
Yeah, thanks, Pauline. I'm Han Verheijen. I'm the Managing Director of Cordaid Investment Management, and we're committed to invest in the world's most underserved markets. So in the past 25 years, we've structured some 500 investments in Africa, Latin America, and Asia. We're based in the Netherlands and supported by local investment teams in different parts of the world. It's a pleasure to be here, Jim.
So thank you. We're going to go right into a conversation. I want to start out with the concept of blended finance and how this has become much more important in development in the last 3 to 5 years, and the role that government and donors are playing in de-risking investments like the Bright Future Fund that Cordaid is implementing in ShEquity. And Heather, maybe you could give a little bit of background about blended finance and the concept of additionality and DFC's role, especially as it was defined by Congress in the BUILD Act.
Sure. Yeah, and maybe I'll start with a bit of an overview of the DFC and the BUILD Act for anyone at the panel today who may not have that background. So the DFC, as I mentioned before, we're the U.S. government's development financial institution. We were established by a law passed by Congress called the BUILD Act, passed in 2018. And then we became a full agency in 2020. We were in many ways a merge of the former Overseas Private Investment Corporation, or OPIC, and USAID's Development Credit Authority, but we also got some new authorities as well from the BUILD Act. So our mandate as a government agency is to support private sector development. It's pretty explicit in what we do in all of our policies and procedures and the legislation that we were given by Congress. It's really our mandate to do this particularly in low income and lower middle income countries, and through a range of financial products and tools that we have, such as loans, guarantees, political risk insurance, and also equity investment. We also have a more explicit call out really to work with USAID and its programs now that the DFC exists. So as I mentioned before, that's really what my team does within DFC is we work with different regions of the world where USAID works, as well as where we work, to partner with ways to help USAID to achieve its goals and priorities, and particularly those of its programs on the ground. So I guess the way that we think of additionality, it's really core to the work that we do. It's something that I can say is brought up in pretty much every screening committee that we have, every investment committee that we have. We think of it as what positive developments can be generated or achieved through, certainly at least our engagement, that would otherwise not have been achieved. So oftentimes DFC's engagement is through different structures of blended finance. We could define that as using, I guess blended finance as a whole is using public or concessionary or some kind of donor funding to help to then catalyze private capital. So that's really what we try to do as DFC, is because it's our mandate and our mission to really help to drive private capital. We think about ways that we can design the tools and products that we have to do that. So in terms of our engagement with the Bright Future Fund, I think I'll let Han talk a bit more about that, since he's the leader of that at Cordaid Investment Management. But really our role with that was in supporting the West Africa Bright Future Fund as a guarantor. We've structured a loan portfolio guarantee that provides partial coverage on credit-related losses incurred from loans to SMEs and MFIs that are dispersed under the Bright Future Fund and managed by Cordaid Investment Management. So this is really, to us, a great example of blended finance with the first loss capital that was provided from the West Africa Trade and Investment Hub, which I'll let you all talk a bit more about that too. That really helped to cover the risk and provide some upfront funds for Cordaid Investment Management to really build that track record more in the West Africa region. So, we find this to be particularly needed, different models of blended finance, particularly needed in places like the Sahel, where it's really difficult to get private capital, particularly private capital that's looking for really a kind of a market rate return. We find these types of structures to really be necessary.
I think one of the things I've observed, Heather and Charles, is a really strong partnership between the West Africa Trade and Investment Hub, which is developing this pipeline and portfolio now of 81 partnerships. There will probably be 100 by the end of June. And that ongoing dialogue, regular review of the pipeline and identifying which are the transactions that DFC can come in and complement in structuring a de-risking arrangement with an investment opportunity, I think is really important in how this trade hub has functioned. And Charles, maybe you can speak a little bit about how blended finance is deployed across the portfolio of 80 plus grants now. I think there are 9 funds that you and the team have designed, and maybe you can talk a little bit about that.
Sure, thanks, Jim. So we do invest in non-financial institutions and financial institutions. So for the SMEs, the key concept there is to reduce their capacity or the risk of execution. So we do partner with their co-investors to ensure that they build their team to scale their operations to the extent that they reach a scale that makes them attractive to follow-on investors. And that could be DFC if they have that scale, or to impact funds that operate in the region. With the financial institutions partners, the key theme that we want is to attract private capital into their funds that they invest in the SMEs. And so the theme there is, again, West Africa has large perception risk in terms of security, complexity, social dynamics, coup d'etats, for instance, failed states. And so it's important for us to actually offer this risk protection for their future fund investors so that we can catalyze that SME financing into the region.
So one of the interesting features here of investment in a place like the Sahel, which is a highly fragile, impoverished and violent and risky environment, is, I think, really important in terms of how this de-risking takes place. And the Sahel suffers from what some people call the fragility dilemma, with all of those challenges and the interest among donors and DFIs like DFC to really support investment and stable economic growth and livelihoods. There's the challenge that there's not much absorptive capacity. Institutions are very weak, administrative capabilities are weak. And so it opens a door to the important role of private investment and working with the right kind of private investors who know how to operate in that difficult environment. And so, Hannah, I want to turn to you and ask you to tell us a little bit about the Bright Future Fund and how it's going to operate in the Sahel in places like Burkina Faso and Niger and other countries in that region. And how do you convince investors to invest in your fund when there's such high risk?
There's every now and then a challenge, Jim, but it starts with a belief, and that is a belief that every human being is entitled to a bright future. That is actually the reason why we called our fund the Bright Future Fund. And just to give you a bit of a background of the fund, it's a $13 million fund focusing on 4 of the most underserved countries, basically globally, not only in West Africa. It's Mali, Burkina Faso, Guinea, and Sierra Leone. And we serve entrepreneurs to scale their operations, create jobs, and ultimately build sustainable livelihoods in these fragile regions. And that is our overall aim, building sustainable livelihoods. And I think it's important to stress that we prioritize sectors that are accessible to women and youth who are often excluded from formal employment. So we focus on agriculture, clean energy, and waste management, simply because a lot of the jobs for women and youth are created in these sectors. And let me just give you a specific example of a recent transaction. We provided a loan to DGB, which is a plastic recycling company established by a 23-year-old Malian entrepreneur, Oumar Lamine Diaby. And the company recycles plastic into tubing for the construction industry. And what I specifically like about this partnership with DGB is that the entrepreneur is young himself. He creates many jobs for youth. And that is important. The core activity has societal benefits as well. Less pollution on the street and less impact, negative impact to the environment. Now, Jim, coming back to your question, how to convince investors to invest in our West Africa Bright Future Fund, I think it's important to stress that although we are an impact-first investor, we aim to preserve the capital of our investors and bring them a decent financial return. And despite the desperate need for long-term finance in West Africa, the perception, and it's a perception of country and market risks, often scare away investors. And the partnership with USAID, so the West Africa Trade and Investment Hub, the DFC, has enabled us to create a blended finance proposition and has encouraged investors to invest in our funds. Because with this blended finance solution, we're able to bring a positive financial return, but next to that, and most important, to create jobs for women and youth in fragile West Africa.
So the combination of this first loss that the Trade Hub contributed $2 million, and you, the Postal Service in Holland contributed $1.5 million. About 10% of the total fund, once you raise capital, will be absorbed if there are any losses by that first loss, which limits the exposure of those investors. And then on top of that, you have that 50% guarantee from DFC. So that really takes the sting out of potential risk and loss for those investors, right?
Exactly. Yeah.
And so you may not get traditional commercial investors. You might get family offices or foundations or investors that share your mission and your vision, right? Aligned with what DFC and USAID and your fund are all trying to achieve.
Yeah. Well, typically we welcome like-minded investors that value the impact above the financial return. So we offer a decent financial return, which is basically capital preservation in real terms. But more important, we create jobs and build sustainable livelihoods in underserved regions.
Thanks for that. Pauline, let's turn to you and talk a little bit about ShEquity and how you invest in entrepreneurs in the Sahel. And I think one of the important features of investment in doing business is how do you build trust with your investors, and how do you overcome some of the perceptions that that they may not think this is a place where it's worthwhile to invest.
Yeah, thank you, Jim. So basically at ShEquity, we're focusing on investing in women who lead or own businesses that are scalable, impactful, and also sustainable. And the way we do this, we really take a holistic approach where basically we start by building an investment ecosystem for female entrepreneurs and build a trusted pipeline. Because as you all know, you have heard about many biases that female face when they're trying to raise capital. So this integrated holistic approach helps us address this part. And the way we're doing this, we set up our own accelerator called ShEquity Business Accelerator. And this accelerator basically serves as a pre-investment and post-investment technical assistance facility. So for example, before we invest in the companies based in the markets where basically there's a lot of risk, we run an accelerator that runs about 16 weeks. And through those 16 weeks, we are actually supporting companies really focusing on a key aspect of running a successful business. Those areas include like financials, team management, governance, marketing and communication, business development, risk management, really like the people running it, they understand the kind of criteria that investors look for when they decide who actually even to talk to in terms of investment discussion. So at the end of the program, because again, this is a pipeline for ShEquity, but also we have built like really a network of other gender lens investors, where at the end of the program, we invite them in and ourselves, we decided which one we can invest in. Obviously, because we are investors, also promising like a return, financial return and impact return for our, investors, we make sure that it's not just automatic transfer from SHIBA to ShEquity. They still have to go through a process of screening, due diligence. But what we're realizing is this holistic approach allows us again to de-risk and support those women who are not investment ready. And Jim, maybe one statistic I wanted to mention is you hear a lot about the fact that in Africa, you have about 40% of SMEs owned and led by women. On the other hand, you hear investors saying they can't find deals, right? This is a dilemma, right? Actually, the reality is most of those 40% are not investment ready. So you need that ecosystem building support to actually get them ready. So when a private investor come in, which again, it doesn't matter impact driven, you still need to have some financial return. Once you have been de-risked and supported, you are more, you have a better chance to actually attract investors. And this is what you have in places like in the US, in Europe, and other places. It's really, the difference is about the ecosystem where you are based. Now, how do we build trust? So basically, we build trust by demonstrating that this is working. It's showing rather than talking. Because I think a lot of time you hear people talk about Africa in general, but I think we need a more specific example to show that there's this deal that was made in Niger, that maybe there have been some exit. When investors see this, then it's a proof point that, hey, actually there's a de-risking mechanism. the perceived risk get mapped out and then distinguished from actual risk. And that's how you get people coming into the market. So for me, and I think Hannah also have, highlight this really, the blended finance, it's a great catalyst because this allows, those impact-driven investors to actually also build an enabling environment which attracts other risk-averse investors to come into the market.
Yeah, I think you make a really important point about the ecosystem, because often people think about a pipeline and a fund as one by one, but you're talking about building the ecosystem, which is another dimension of sustainability. There's a commercial return, so that is part of the sustainability. But if you really want to scale this and attract a next round of funding for your fund, as well as entrepreneurs that can grow, they need that supportive ecosystem, as you're describing it. That's so critical.
Yeah, and I think it's really important to highlight the fact that for so long, many times people have looked at bringing intervention in those markets in the form of aid alone. And we all know like aid does not transform economies. Like you really need to bring the angle of entrepreneurship innovation and backing homegrown innovations with a clear strategy to go from piloting to scale. And using that to catalyze private sector. Again, the private sector will come to make a profit. It's the way to go, because the aid alone does not work. And we have seen it over and over.
Yeah, that's a great point. In the Sahel and all over the world, I think donors are realizing that private capital markets have enormous resources. And capital, one point I would make is capital is not just about the money. It's about everything wrapped into it, which is the know-how, the technology, the processing, the standards, the people management, the access to markets that often, comes with that capital. And I think that's something that I would really like to emphasize for all of our viewers, that private capital has a lot more than just the money, and the way it's deployed, the way you're describing it, into the ecosystem and the leverage that you're obtaining is really critical. One thing I want to switch a little bit and focus on is women and the role of women, because I think all of the donors and DFIs are really focusing on women as well as youth. And so the question I would ask my colleagues on this panel is, why is lending to women not just a nice thing to do, but a sound economic and investment strategy? And Heather, why don't we go back to you to talk about that, and maybe you could explain a little bit the 2x initiative and criteria that that particular initiative requires.
Sure. So I think you really captured that point correctly in that, at least we at DFC, we really see investing in women as an economic opportunity. Certainly there's moral reasons to not excluding half of the market as well, but we really do see a lot of economic opportunity in expanding financing to women-led businesses and ensuring that women have more equality within the workforce of the companies that we work with too. So, just some context, women-led SMEs worldwide face an estimated $320 billion shortfall in access to credit. Closing the gender labor gap could add $28 trillion or 26% to the global annual GDP by 2025, according to a McKinsey study. And by 2028, it's estimated that female consumers will control about $15 trillion of global consumer spending. So this is truly a huge market. And in the Sahel is just kind of a subsegment of that. But I think because of those reasons, the DFC joined what's called the 2X challenge, or signed on to the 2X challenge, which originally called for the G7 and other DFIs to join together to collectively mobilize funding, financing in commitments that provide women in developing markets with improved access to leadership opportunities, to quality employment, to finance, enterprise support, and other products and services that enhance their economic participation and success. So since the 2X challenge was originally began several years ago now, it met its $3 billion target of mobilizing $3 billion worth of financing. Collectively, we've now set another $15 billion target. over the next few years. So, and to date, DFC has catalyzed more than $13 billion worth of financing toward women-led businesses or other businesses that promote women's participation and opportunity. So quickly, just for anyone interested on the line, and you can certainly find out more on our website about the 2X initiative, but some criteria around qualifying as a transaction with DFC and with other signers to the 2X initiative to be kind of called a 2X transaction. There's 5 main criteria. The first is around entrepreneurship. So this would be if the business or the entity is founded or led by a woman. We look at leadership as well as the second criteria, whether there's a significant threshold of women within senior leadership or on the board. Third is looking at the share of women in the workforce and the quality of that work. Fourth is whether that particular business provides a product or service that disproportionately benefits women. And fifth, which is how we've worked with Cordaid in this example as a financial intermediary, is looking at what proportion of their portfolio is anticipated to meet really the first 4 criteria that I just mentioned. So our transaction with Cordaid in providing a loan portfolio guarantee did meet the 2X criteria. So we're very proud of that deal, as well as others that fit this criteria that we look to support.
Yeah, thanks for that overview. The global perspective on how donors and DFIs are really emphasizing the importance of women. And some of that is to counter the bias against women that's built into, for example, women don't have access to property rights, which is required for collateral and getting loans at a very micro level. So half of your community are women and they're not participating the way they could, and how to unleash their economic, entrepreneurial, and work capabilities is part of the purpose here. Let's turn a little bit to Han, if you could talk a little bit about how the Bright Future Fund is focusing on women and how you track that.
And let me start by underlining what Heather said. So there's a moral reason to focus on women, but also an economic reason. They are simply better in creating sustainable economic development, female entrepreneurs. Research has shown. And like Heather said, we have committed ourselves to the 2X initiative. And I think it's good indeed, Jim, to just share with you a case, an investment case of how it works. And I would like to use the case of Kisima, which is a Malian company founded by Madame Singpaga. And the company processes balanized fruits to make teas and soaps and oils. And as a woman entrepreneur, you should realize she's operating in a highly fragile region and in Mali. So she was unable to source local investment capital, and we provided a loan to upgrade her processing facility in Bamako. And what I like about this specific example is that our loan catalyzed local working capital, which was critical for the success of Kisima. But that it created income for some 16,000 young women in the Mopti region, where there are really difficulties creating an income. So it has created, or a relatively small loan has created an immense leverage. So fixing income to 16,000 young women in Mopti, and some 40 jobs in the processing company itself in Bamako. I could give other examples, but I think we're a bit critical in time. So up to you. Shall I give another example?
Thanks for sharing that. Let me ask Pauline to give an example, and also how you focus on entrepreneurs, which is really the thrust of ShEquity.
Yeah, I just wanted to also go back to what Heather said and mentioned that for Africa alone, we're talking about 42 billion gender funding gap. And also the same report from McKinsey shows that 316 billion could be added to African GDP by 2025. So this is bigger than the South African countries, the whole GDP, right? So it's really big. And this statistic is not getting better. So last year, only 0.95% of actual funding went to companies that are owned and led by women. And the last 10 years, only 3% went to women, fund, like a company owned and led by women. So clearly there's a rationale in terms of business case, but as also as Han has said, there's also impact perspective. So our ShEquity investment criteria also align with 2X challenge. And as I mentioned before, on the top of just putting cash on the table, we actually work with the companies to support them to be able to go from where they are and unlock the growth and the scale, which is again one of the proof points that we need to be able to showcase that there is indeed a good business for investor to come and invest in. And perhaps giving you a specific example, you can also see how this works. So we invested about a year ago in a company called Medzaf, created by a woman called Vivian Nwaka from Nigeria. And Vivian created Medzaf really to address healthcare challenges, mostly around fake medication. So if you ever travel to Africa, maybe some other part of the world as well, you probably might have heard that if you are sick, just be careful where you're buying your medication, because not every medication you buy is actually safe or accurate. So Medzaf basically is a healthcare supply chain management platform that is providing affordable and medication in one place with increased safety and transparency. And currently Medzaf is servicing around 300 hospitals in Nigeria, including clinics and pharmacies as well. And it has been also instrumental in managing the supply chain for the PPP material during the COVID crisis in Nigeria. And they're getting ready now to actually scale in other markets, which we are supporting them as well, including, for example, Francophone Sahel countries. In terms of impact, Medzaf alone, in terms of the supply chain, they have impacted around 13 million people. Those are people who are accessing healthcare through the whole system. They basically been able to address the issue around, fake medication. And it is kind of estimated that about 30 and 40% actually of all medications sold in Africa are fake or substandards. And again, just to repeat, between 30 to 40% of medication that would be sold on the market are either fake and substandards. So this is how she's saving lives. So Medzaf has now created about 40 jobs, and about of those, the staff members, 50% of them are women. And also Medzaf is contributing to sustainable development goals. 4 of them. One is the goal number 3, which is about good healthcare and well-being. Another one is goal number 5, which is gender equality. And number 9, which is about industry, innovation, and infrastructure. And number 12, which is about responsible consumption and production. So again, we invested in this company about 1 year ago. And fast forward, the company is getting ready to raise Series A's, and has multiplied the number of jobs created, impacted, more than 13 million people in Nigeria, and getting ready to bring this impact across the continent. So that's the proof point. For example, if someone is saying, hey, is investing in women a good business, or is it a charity? So this example shows that investing in women is a smart business. It's not a charity.
Yeah, those are great examples. And I think these examples that you and Pauline and Heather and Han have given multiply hundreds and thousands and millions of times is what turns these economies around, and what we're looking to do in terms of replicating and scaling what we're doing in each of these funds. Let me turn a minute to some interesting questions we're getting from our audience. First one goes to Heather and Charles. What are the origins of the private capital you're seeking to attract? Do these funds only come from the US? How are you creating sustainable and self-sustaining financial pathways for countries in the Sahel to ensure their long-term economic viability? Charles, you want to take a first stab at that?
Sure. So for us, it's important to leverage the public funds for long-term impact. So when we look for private investors or private funds, for instance, we know for sure that they're interested in launching Fund 2, Fund 3, They want to be able to return the capital and reinvest the capital in the region. And so for us, we try to manage the moral hazard that way. The second thing as well is to listen to their strategies, because the public funds needed to be tailored to the specific conditions or the pain point that they were experiencing. For Han, for Cordaid, for instance, this was happening right in the middle of COVID-19, which meant that the SMEs were restricted from having capital. It was important that the first loss actually be investable so that they can quickly deploy this in the market, capitalize the SMEs so that they can run their businesses until things somewhat normalize. For ShEquity, as Pauline mentioned, they were working with small businesses that were never advised before, had limited access to networking in the Sahel. It was important to capitalize or use the public funds to capitalize on to grow the business for them to invest and for future investors. So in what we try to do in that case is ensure that the capital, the investable first loss, can be recycled if it's not used. If SIM invested in good companies, never experienced losses, that first loss is earmarked for future funds that they raise. The same goes for ShEquity.
Thanks. Heather, anything you want to add to that? We have 3 more questions I also want to get to.
Yeah, just to quickly add, at least in terms of the origins of private capital, part of the question that you mentioned, Jim, pre-DFC, when I guess before the agency was formed and we were operating as our predecessor agency, the Overseas Private Investment Corporation, at that time, there was a requirement to have a US nexus, if you will, which essentially meant having some kind of US representation as a part of the deal that OPIC was joining, whether that was in ownership or leadership of the company. There had to be some kind of US representation there. Now that the DFC has been operating since 2020, that US nexus is no longer required. So it's actually significantly opened up the opportunities for us to work with companies that are based in the countries where we work, and not just based there, but led by individuals from those countries, with shareholders from those countries or from the region surrounding. So it's greatly opened up the opportunity for us to work with more local fund managers or local financial institutions where we work. So I'll stop there, Jim.
Great, thanks for that. Next question, I think I'll direct to Pauline and then Han, which is from Courtney from Catholic Relief Services. Can you speak to if and how increasing or improving social cohesion has been a part of the support for the business and investing enabling environment and ecosystem?
So Han, maybe I'll let you answer to that, because we haven't really worked in this space. What we realize is at the end of the day, when we are able to support women-led and owned businesses that create jobs, this becomes a connector in terms of addressing other things around it. But we haven't really strategically come across this specific case.
I can take over, Paulina. It's great to have CRS actually in this meeting. Good to have you, Courtney. Next to investments, we provide technical assistance to our investees. And one of the technical assistance elements that we quite often support our investees with is gender and youth action plans. So, and that creates, let's say, proximity and cohesion within the communities that the investee is working in. So it is not a very explicit element of our investment approach, but part of the technical assistance that we do provide to our investees is related to improving the social cohesion in the communities. I hope that helps a bit, Courtney.
Yeah, thanks for that, Han. Let me, a couple more interesting questions. Where in the ecosystem, in your experience, do you see the biggest gap to supporting women outside of bringing in investors?
I can try to take this one. I think it's what I mentioned is really the pre-investment support. Because at the end of the day, investors will not come in, or even when they come in, they speak to you and you are not investment ready, they will not invest. So that pre-investment support to build an ecosystem, to also link up with existing ecosystem. When I talk about building an ecosystem, it's not coming from outside and creating something new. It's being able to also connect the existing actor and have a support mechanism. So when an investor comes in and maybe you need a specific support, there's already a community where you base that can support you. And I think it's the moment people realize there's a potential investment coming in, that's like the missing link that actually leads to other element being unlocked.
Good. That's a good point. Here's another question. How do you strengthen confidence from private investors other than first loss capital arrangements, guarantees, and other financing mechanisms? For example, one participant says they provide training to build social capital before accessing loans. This support is necessary for reducing default rates.
Can I comment on this quickly, Jim? What surprised us in the fundraising is that the investors that invest in the West Africa Bright Future funds are okay with the financial return. They don't dive too deep in the financial model, but what they really appreciate and what they value is that the investment teams are based on the ground, and that is critical for the success of the fund. You need to be close to your clients in order to really support them in this fragile context, but that is also recognized by the investors, and having local teams like Pauline on the ground has strengthened the confidence from our investors.
There's a related question about whether there are risk mitigation measures that for certain investors or actors who might hesitate because they think there's risks associated with working with small farmers or at-risk groups or women's groups. And maybe one of the responses to that is that there are very interesting, innovative business models emerging, digital platforms that allow reaching out to huge numbers of micro stores, micro entrepreneurs, and so forth, that reduces the risk because you're using digital wallets and digital data, a blockchain that allows you to reach them where otherwise it was impossible before. Any other thoughts from our panelists on that question about risk mitigation for some of the groups that we're trying to work with?
I can add something to that. So it's quite related to capital and trading. And I think it's very similar to the ShEquity model. So in Nigeria, for instance, we are working with an accelerator program, again, building these companies up, leveraging their expertise in new technology, specifically targeting food security areas in some of the states that we focus on. And so the key there is to basically the private knowledge, the networks, their innovation, give them enough support to execute that in terms of the TA, which then attracts follow-on investors into their fund, which then builds those companies up again for the follow-on investments. So it's not just a financial solution, but it's also leveraging the public capital to provide that technical assistance to those very SMEs that need support, like networking, assessments, gap training, et cetera.
Thank you, Charles. We're coming to the end. We have 3 minutes left. Not a lot of time, but I'm going to ask each of our panelists just in a quick half minute, what is a takeaway that you want to share with the audience about what we've been talking about today? What's most important? Heather, you want to start?
Sure, I can do that quickly. I mean, I think just takeaway from me is that the DFC, I mean, it's really our mission to support the private sector. We explicitly invest in the private sector. We try to catalyze private capital, promote private investment. So any ways that we can do that and consider opportunities to do that, we're always open to hearing those. I think knowing all of that, and certainly what we've discussed today with the two funds here and working in the Sahel in such a difficult environment, blended finance is really core to what we do, particularly in those environments. So always open to helping to brainstorm on opportunities to do that and to support companies and financial intermediaries that are looking to do that too.
Thank you. Go to Han and then Pauline and Charles. We have like 30 seconds for each of you as we're wrapping up here.
Quickly, blended finance is critical in achieving and building sustainable livelihoods. And for that reason, we're really grateful to partner with the USAID and the DFC, because with blended finance, we're able to bring positive financial returns to investors. And that is critical because without investment capital, you cannot scale. And ultimately, it's all about skill. That would be my plea.
Thank you, Han. Pauline?
So very simple. The trickle-down economics linked to investing in female entrepreneurs is rare, So we again have heard about the fact that we can unlock 316 billion in Africa if we close the gender funding gap. So basically, given the catalytic role that blended finance plays, this is really the key to unlocking those, 316 billion. And I'm convinced that channeling investment through the fund that understand the ecosystem and the segment of the population to be invested in is really the best way to go. At the end of the day, we need to be backing local people, because one of the things we hear a lot is you can't become what you can't see. So we need to be creating those role models that also inspire the people to become entrepreneurs and solve local challenges with local solutions that can go global.
Thank you. We have like 30 seconds, Charles. What would you say?
For sure. For me, it's about long-term impact, maximizing the use of public funds. So you need to partner with long-term vision, impact creators like Pauline and Cordaid, so that beyond the life of the trade-up, they can generate the impacts with future funds.
Great. Listen, on behalf of Creative Associates International, USAID, who we partner with, and all of my panelists here and all of you participating, thank you for joining this session. And we look forward to additional sessions for the rest of the conference. Thank you all very much. Have a great day.